Hey traders, it's BA here with, I'll call it a special edition for Friday night. It is December 21st, 2018. I normally don't put anything out on Friday nights, but hey, we're in just not one of, but the most unusual market that we've ever seen. So just want to give you an update on how things transpired today. It's another large range volatile day today in the markets. Once again, we just the selling pressure is just so intense. It's mind-boggling. I mean, you watch it unfold, or I don't get to watch every tick of the market, but I'm checking the prices every so often. It's just unusual at the amount of selling pressure that's taking place. And the market just can't catch a break. It hasn't all year long. The backdrop of this has just been gnarly. I mean, it's been one issue after the other, and everything lingers, and nothing's solved. And that's what the market hates. It hates uncertainty, and the uncertainty is just built and built and built and built. And here we are in December. Trade war's still lingering. We've got the Fed raised interest rates when we were already hurting in the market. We've got the trade war rhetoric still continues, which is still putting pressure on the marketplace. We've got the looming potential shutdown in the government, which causes great consternation amongst market participants. We had the resignation today of a very trusted official, with the Department of Defense, and it's more than the market can bear. The complete and utter uncertainty of everything that just continues to get lumped on top of the market. They only want to do one thing, man. That's just get out. It's certainly not a vote of confidence for the administration, for the way they handle certainly the policies, and I guess more along the lines of the environment and tone they set for the business community. So the markets are having a hard time. Traders are just tired of the uncertainty, so they do what they know how to do, and that's to sell and get rid of everything. So again, I go back and I keep showing you the reports that come out about how bizarre this market is, and I'll just read you some of the bullets here from Jason's sentiment report. And I'll go to this line here where it says persistent and severe selling has triggered big losses and new lows for 4 out of 5 days, seen only 3 other times in 70 years. Every study, as I went through here and read this tonight, and he's been doing this for over 25 years, and he's never seen anything compare to this right here. When the only markets that compare to this are the time periods, he calls them the 3 great crashes in since the 1900s. 2008 was one. The crash in 29, which really there were a series of crashes, but he's referring to this one as the Great Crash too, because the only other markets, the only other crashes he can find that even come close to what we're experiencing are those that occurred in the depths of the bear market, 2007, 8, and 9. The worst selling was in October of 08. That was just horrible. And then, of course, we have the selling pressure into 31 that was one of the final legs down in the Great Depression. So that's what he's finding when he searches back through all of his data, is he only has a couple of instances to compare this to, and it's the greatest crashes in the market history. So this is just so unbelievably aberrational. It's I mean, I've never seen some of these things, these models that he have register extremes the way they have. He refers to some of them, and you guys have heard me mention that the VIX is acting funny. Well, he's picking up on it too. He gives a much more objective look at why the VIX is not keeping up than I have. I'm just looking at how the markets are moving, and the VIX is not capturing the volatility that we have here. So, in my mind, it should be a lot higher, and he's proving that by comparing it to the average 2 range. Yeah, so we're in territories now for some of the big crashes from this little VIX study he's doing. So that's what that is. Let's see if I can take a look. Junk bonds, yeah, they're getting crushed too. Everything's getting crushed right now. Over the past 5 days, an average of more than 40% of the securities traded on the New York Stock Exchange and NASDAQ exchanges have sunk to 52-week lows. It's a stunning figure that has been matched only twice in 35 years during the 2 most traumatic crashes. He's referring to, in this instance, the 87 crash and the cluster of crashes that occurred right here in 08. This all occurred right at the same time. And if you just include only the New York Stock Exchange securities, now you keep in mind the NASDAQ wasn't created back, I forgot when the NASDAQ came on board, but it doesn't go back as far as, tech stocks there were no tech stocks per se back in the early days. But he's going New York Stock Exchange back to 65, and it's just an extremely rare occurrence. So here's the 4 out of 5 days, greater than a 1.5% loss to a 52-week low from 1928 to 2018. This cluster here occurred right on top of each other, in 31. Looks like there was 62, yeah, 1 in 62, a couple during the 01-02 crash, and then of course now. So you can see here that the 31, we were still trying to come out of the depression during this time, so there's still a little bit of a pullback. But look at this one, 31, the market went up 136% in the next year, 26% in this case. In 01 we lost 13% next year, and then in 02 gained 20%. So yeah, he's what Jason's saying here, this last sentence: a week like this is horribly unusual, and the precedents for what we're seeing are getting fewer and fewer, as noted above. So so what he's saying right here, everything that's underlined is new ads. I've told you that because of the landscape we had, nothing's working right now, and it's setting the stage for what I think is, going to completely unravel my theory. They've pushed this market. When I say they, I think you know who I'm talking about. They've pushed this market when it shouldn't have been pushed. We're at the tail end of a bull market, and you can't tease this thing and whip it around like it's a young bull market. This thing has got to clear itself out. But anyway, I think the administration, the Fed started this bubble, but looks like the Fed, with the help of the administration, is going to try and put an end to this thing, unintentionally, earlier than it's supposed to. What Jason's saying right here is, I'm worried that we are indeed in the midst of one of those once-in-a-decade or longer exceptions, and maybe that in itself is a tell on sentiment. What he's saying right here is, let's go back to the prior sentence. What he's saying is, even in the context of a bear market, it would be extremely unusual to not see a relief rebound in 1 to 3 months, given the readings that we've seen this week. But this was added today. I'm worried that we are indeed in the midst of one of those once-in-a-decade or longer exceptions, where it's not going to clear up. That's what he's saying, that there's just too many things that the market's got to deal with, and the market does not think that this cycle is going to end. It doesn't think, it thinks the destabilizing effect that some of the things that, there's been a very strong destabilizing effect in the market this year, and the market just telling you that they do not believe that it is going to go away, that it's going to subside, that it's going to get better. That's why they are selling and just getting out of the way. So that's what Jason's saying right there. And unfortunately, I'm very afraid that this is completely going to unravel, like I mentioned earlier, what I thought was going to be the mother of all rallies. I'm still looking at the data, but we're really close right now to a complete unwind. The credit markets are looking really bad right now, and that's what I'm really keeping my eye on. There's some aspects of the credit market that are starting to dry up. That's not what you want to see. In a correction, you don't want to see the fracturing. There's a possibility they could put this thing, let's just take a look at the let's remove all studies. Had a huge gap down. We're 12 basis points away from an inversion. So it's rapidly approaching the inversion territory. We'll take a look at, but even once we get inverted, we still have a lot of time, unless there are other unusual events that start unfolding. And I got to tell you, this is, you can tell by the market action that what is unfolding right now is really, really putting a crimp in the market. So we're 12 basis points away from the inversion. Let's see what an SPX looked like today on some of the levels that we projected. I mean, look at these guys. This is just an unbelievable move in the marketplace. Well, I have to tell you, just my assessment is that, more than likely, unless something changes, we're going to wake up tomorrow to a government shutdown. The market's going to gap down probably Sunday. It's going to roll simply because nothing has changed all year. It's just constant uncertainty at a very, very disturbing level. Uh, I mean, I've certainly never seen this kind of selling in my 30 some years of watching the markets go up and down. Yeah, that October had some very, very unusual moves, but nothing like what we're seeing here. This is just bizarre, completely bizarre. Um, we could very easily, the way we're cutting through this in the SPX, see that 2357 level. I mean, we're only talking in this market here 40 points. This market moves 40 handles. As the futures markets move that much overnight, so that's nothing of a move right there. Next stop on this thing is that's, yeah, I would say that's a pretty good place for it to stop right there too. 2265. Yeah, 2265 is the spot. It stopped at an area. You know, we had this projection here, but there are also some important price levels over here to the left. So, all right, guys, just an update. Stay tuned. Just kind of watch the markets. No, don't trade. Don't get in front of this. This is a really really bizarre market. When it does rally again, I don't know when. I mean, this is anybody's guess at this point. It will probably be a very, very large rally. The rally won't mean anything, though, let me tell you that. The one-day rally will just set the stage for what's going to be more important is what happens 2, 3, and 5 days after that. So let's hope we rally soon. We're getting really close to one of the biggest, the absolute worst December in the history of the markets. So guys, have a nice weekend. We'll tune in Sunday night, see how the markets open. Hey, until next week, this is BA signing off.